Yo, what's up traders? Welcome to a new video. In this video, I'll be showing you a fantastic trading strategy on the Bitcoin chart. So this is an amazing strategy that you can use if you want to trade crypto, but also if you're trading Forex. For this trading strategy, I'll be using 3 indicators. I'm showing the strategy on the 1 hour time frame, but you can also use it on lower time frames like the 15-minute or the 30-minute. Without further ado, let's get started. Alright, so as I mentioned, we will be using 3 indicators. First of all, I'm using TradingView to show you and explain this trading strategy. It's a free charting platform, so everybody is able to use this trading strategy. By the way, comment I subscribed, so I know exactly who my subscribers are, and yeah, I'd like to meet you guys. Anyways, let's get started. Over here, I'm looking at the Bitcoin chart at the moment on the hourly. And for this trading strategy, we will be using 3 indicators. Let me show you the indicators. First of all, we will be using the exponential moving average. Just this one. I click on that. Next, we use the TDI. And make sure to use this one over here by Crypto. And last but not least, we use the TEMA. And make sure to use this one over here, the TEMA one by H. Potter. Alright, as you can see, I also adjusted these indicators, the settings of these indicators. So over here, the 200 exponential moving average. Make sure to use the 200, not the 9, not the default settings, but make sure to adjust it and use the 200 exponential moving average. I'm using the blue color. Then we also need the 200 TEMA. Over here I'm using the red color, and the TEMA stands for the triple exponential moving average. So use the 200 as well and give it a different color. I'm using red. And last but not least, we have the TDI, and make sure to use the default settings, so do not change anything. And I checked off this slow moving average box, the fast moving average. I also checked it off. Yeah, you can play around with the colors. Make sure to use the RSI. I just use the default colors. I like it. And also make sure to disable all these levels. And yeah, if you want, you can disable the plot background. Yeah, that's basically everything you need. And this is how it will look like. Alright, let me go over the trading strategy instructions. For a buy trade, we need the price to be above the 200 exponential moving average, which is this blue line. And as you can see, the price is above the 200 exponential moving average. Then we need to wait for the price to drop below this red line, which is the TEMA. And as soon as that happens, we will be watching the TDI. And we need this line. So now it's a red line, and let me show you. So now it's a red line, but it also is a green line. As I mentioned, you can play around with the colors if you do not like these colors, but make sure that for a buy trade, we need the red line to be cross below the blue line. And as that happens, and it comes out of the, and it comes back in the band, then things start to become interesting, because then we need to wait for the price to cross the TEMA again at this candle over here, and then we take the trade about here. When it crossed the TEMA line, we place our stop loss below the latest low over here, and we use a 1-to-1 risk reward ratio, which is about here. And when we enter, we risk 50%. Why 50%? Because when it hits our TP1 target, then we increase the target to a 2-to-1 risk reward ratio trade, which is about here. And then we place our stop loss to break even. So that's regarding the stop loss and TP placement. Let me show you another buy signal. Okay, first the price is above the 200 exponential moving average. The second step is waiting for the price to cross the TMA, and it happens about here. Then we need to wait for our RSI to get out of the band, and then when it crosses in the band, then it gets our attention, and that happens about here. It's hard to see, but it comes out of the band and then it comes in the band again. And as you can see, we wait, we take the trade over here. Why? Because this bar closed above the TMA. So we grab our long position tool, we place the trade over there, we use our stop loss below the latest low, which is here, and then we're aiming for a 1-to-1 risk reward ratio trade, which is about here, and we use 50% of the trade. And then it's a long trade, it didn't hit our stop loss, which is good. And yeah, over here our target gets hit, our TP1 target gets hit, and again we risk 50%. Why? Because then once our target gets hit, we drag the tool to a 2-to-1 risk reward ratio trade, which is about here, and then we place our stop loss to break even. And yeah, then this turned out to be a winner as well. As you can see over here, there was a nice winning trade. I hope that the buy examples are clear. Let me show you a sell example as well. This is a sell example. Over here we see the price is below the blue line, below the 200 exponential moving average. So we wait until the price crosses the TMA line. So over here the price has crossed the TMA line. And then next we have to look at our TDI indicator, and the green line needs to cross the blue band, which happens about here. And then when it comes back inside the band, then this starts to become interesting. The only thing we need to do next is wait for our candle to close below the TMA. If I zoom in a little bit, this didn't happen. So we still wait until finally over here we see that the candle crossed the TMA and closed below the TMA indicator. So this is our entry signal. By the way, we also see over here that because it didn't cross below this TMA line, it went to the upside, and then we see another TDI situation over here. The RSI is above the blue band and then it crossed the blue band back again. So basically we have two situations over here. But let's go back to this example. We take our short position tool and we place our stop loss above the latest high, and then we are using a 1-to-1 risk reward ratio trade, and as you can see, this turned out to be a loss. Not every trade turns out to be a winner, so that's part of trading. Let's look for another opportunity. Over here we have the price below the 200 exponential moving average, so the only thing we need to do is wait for the price to cross and close above the TMA line, the TMA indicator, which is about here. Then we need to wait for the RSI to go above the band and then drop back into the band, which happens about here. We see that it has crossed the band and now it starts to drop lower and lower, and over here we see that it has it's back in the band. Okay, so the next thing we need to do is wait for our candle to close below the TMA line. So we're almost there. We need to wait, and then over here we see that the candle closes below the red line, which is our sell trigger. Over here we place the stop loss above the latest high, and then we are aiming for a 1-to-1 risk reward ratio trade, which is here, and that is our first TP target. As you can see, our target gets hit, and then what do? We use a 2-to-1 risk reward ratio trade. As I mentioned before, we risk 50% on the initial trade, and once our target gets hit, then we increase our TP target to 2, and then overall we still made 1% if we risk 1%, right? If our target gets hit, our second target. So let me show you. Yeah, that is the case. It has hit our TP target, and this is a nice example of a sell trade. And I almost forgot it. Once our TP target 1 gets hit, we place our stop loss just a little bit below break even. So you cannot lose the trade anymore. Alright, this is the trading strategy. It's not that hard. It works quite well. But if you're wondering what is the win rate, what is the gain on the account, I can test this trading strategy 150 times. If you are interested in that, just give this video a like